It's been a while since I last did a portfolio update, and my portfolio has changed quite a bit. I've added to positions and I've even removed a position. So let's not waste any time and jump straight in. So here we are on my Trading 212 ISA portfolio. If you want a Trading 212 account, whether it's an ISA or a general investment account, then feel free to use the link in the description. Using that link will get you a free share worth up to £100, and that will start you off quite nicely. So you will notice that these numbers will probably change over the course of this video whilst I'm recording my screen, and that is because the US stock market is currently open whilst I'm filming this video. So the first big difference since the last update is the overall total in this portfolio. You can currently see that we're sitting at this number here, £14,035. It's changing, you know, look, it's just changed ever so slightly there, but around that sort of number. And during the last update, the total figure came out as £13,261. So that is an accumulation of two different factors. The gains in the portfolio, which we'll take a look at, the total returns, and also the amount of money that I've been able to add since the last update into this account. So you can see that the total amount that I've put in, the invested amount since this portfolio opened, which was April the 6th, the new tax year, is £11,505.07. So last time it sat at £10,177. So since the last update, you can see that I've put a fair amount into this, but the difference here is the return. Last time, the return for the total time that the portfolio has been open was over 30%, 30.31 to be precise. So you can see now it's 22.14. So there has been a significant decline in the total returns in this portfolio. And then when you start to look a little bit more in depth at this graph here, you can see that overall it's doing really well. And of course, 22.15% is phenomenal. If you were to compare that to, you know, just the average return in the market, it's way better. But of course, it's such a tiny time period that we're looking at. Macroeconomics comes into it. The stocks that I have in this account come into it. Some are very nerve-wracking to actually hold and, you know, make your stomach flip on some days. It's all about the mindset when it comes to that. But anyway, what you can see is there were two quite big dips. Hopefully you can see this quite clearly. Let me go to, okay, I don't know if that's really any better, but you can see a dip here. So on the 19th of July to the 23rd of July, there was quite a big dip. And then again here from the 4th of August all the way down to about the 20th, the 21st of August, the portfolio quite literally did a little bit of a nosedive. So this graph has been absolutely mad, really. You can see that it's been very volatile, it's been very up and it's been very down. And recently it's been a little bit all over the place. So this first quite steep decline that we see here between the 19th of July and about the 23rd of July-ish was caused by Tesla being down by like 9% in that time period, and then Palantir being down by about 11%. And those two, as you'll see in a minute, are the largest two positions in my portfolio. So this drop, Palantir were down by about 20%, which is absolutely brutal. And Tesla were down by about 8%. These two positions being my largest holdings, what that means is when those two do really well and it go, you know, they go up by whatever percentage in a given week, a given month, my portfolio looks amazing because, you know, those being the largest positions really move my portfolio. But it works the other way as well, doesn't it? If those two aren't performing too well and there has been a stock price decline, I feel it in my portfolio and I feel it quite bad. I've said it time and time again, I don't really mind. This is not something, you know, I'm not looking to withdraw from this portfolio in the next 1 year, 2 years, 3 years even. This is very much long term for me, and I am expecting to have this very up and down time, very volatile relationship with these two positions, these two companies, these two stocks in particular, because that is just the nature of growth stocks. And also Tesla in general is a very noisy, very noisy company. So, you know, it is going to happen like that. And in the last update, the return amount was sitting at about £3,084 or something similar to that. And now it's down by only by £2,000 month. You can see it moving now, £546 or whatever it may be. And just a second, there you go, it's gone up again. And I've just said that I've added quite a lot to the portfolio during that time as well. So that does clearly mean that, you know, last time I filmed this video, my positions were doing a lot better than they are now. But that doesn't bother me at all. You know, I have such strong convictions in the positions that I hold, especially Tesla and Palantir, hence why they're my largest. I know it's all short-term noise, and I believe that these companies will do very, very well long-term. So I'm not really bothered. If anything, I would actually quite like them to stay as low as possible so I can accumulate as many shares as possible for as cheap as possible whilst I'm in my accumulation stage and I'm in that growth stage of investing. And I think it takes quite a long time and quite a lot of research to get you to that level of conviction where you are able to switch off from the stock going down by, you know, 8% in a given day and not stressing about it. And as the amazing guys already know that are part of the Patreon and I speak to on Discord every day, I do buy these two positions very, very regularly. And I will normally add more when they dip by, you know, a significant amount. If you do want to come and join the Patreon and get access to the Discord to chat to myself and other like-minded people every day, that would be fantastic. No pressure, of course, but I will leave a link in the description. So like I said, I started this portfolio in April this year. And one of the main goals I set for myself is to try to utilize as much of the £20,000 that you can have in one tax year as possible, as much of that as I possibly could afford. Currently, I'm sitting at 26% ISA utilization. And of course, we have recently entered September, so I've still got quite a while. I am aiming to hit about 60%. Hopefully it can be slightly more. It might just be slightly less, but around the 60% mark is what I'm hoping for this year. And then hopefully next year I might be in a position to max it out. I don't know, it depends on many factors. There are some guys on the Discord that have maxed out their ISA already this year. So that is really impressive and that's inspiration, and I hope I can follow in their footsteps. So shout out to you guys if you're listening. And now they just invest into a general investment account, which like I said, you can also get on Trading 212. You can get a general investment account or you can get an ISA. So every single month that I get paid, I set aside an amount of that to be able to invest, and then a subsection of that will be held back in order to sit in the pot ready to go if there is an opportunity. So I have like an op pot, an opportunity pot, if you will. And that just means that I'm not having to either miss out on opportunities, having to sell positions in order to free up cash, or having to dip into my savings and emergency fund. Right, so let's actually move on to my holdings now. I will scroll down ever so slightly here and you can see in just a simple shot, those are all of the positions that I have inside of this ISA. For those of you who may be new to the channel, I do also have my previous ISA on Vanguard. In that account, I have VUSA, which is an S&P 500 tracker, and I have the FTSE Global All Cap as well. So let's firstly go through the positions that I have added to since the last portfolio. So kicking us off is Alphabet, and I have added to this position since the last update. And you can see that at the moment, and this position's doing pretty well. You can see that I'm up by over 25% on this one since the portfolio started, and they had a great earnings at the end of July. They beat expectations and they saw growth across all of their sectors, and this of course helped the stock out quite a bit. Then we have Amazon, which I also have added to since the last update. They also had a very, very good Q2 earnings, and recently they've actually announced a partnership with Shopify, and it basically allows Shopify merchants to offer their customers Amazon's Buy with Prime at the checkout. This then means that obviously the Prime members then will be getting fast next day and free delivery when they actually shop at particular participating Shopify stores. So that is going to benefit both Shopify and Amazon. The next position that I've added to is Palantir, and I've added around 40 shares-ish since the last update. This one's been a little bit all over the place. There was a point in time where this position was up by a lot more than 27%, but I mean 27 is still absolutely fantastic. Their Q2 earnings were pretty decent. However, a lot of people weren't really that happy or pleased with the stock buyback that was announced. And the stock price, of course, reflected this very quickly. In my opinion, AIP demand is looking incredibly strong, and we are now in the month of September, which means we should hear about the NHS contract. So there are lots of really exciting potential catalysts for Palantir and Palantir stock, and I just think that it's in such early days. I really see it solving a solution for many businesses and organizations, and yeah, very, very happy to hold this as my second largest position, and I plan to just keep adding to it over time. And then we've got my largest position, which is of course Tesla, and I have been adding to this as much as I possibly can. So since the last update, I believe it's about 4.5, maybe 5 shares of this one that I've actually added. My aim is to get this number to a nice round 50. You can't really get rounded numbers on Trading 212, honestly. Look at some of these numbers, they're just so long. But I want to get to 50 shares. That's my next small target, which isn't really that small given how much one share is. But then I just want to keep building on from there. I saw someone post on X the other day, follow me on there by the way if you haven't already, I'm on there every single day, basically saying that they had reached a milestone of having 1,000 shares. That is insane. I come back to this video in a few years. I really hope that I am on 1,000 shares because that would be excellent for me. Now I'm going to struggle to remember everything that's happened with Tesla since the last update because it feels like there has been something new every single day. But I do try and cover it all on my channel as much as possible, so I'm sure if there's anything that I'm missing, there probably is a video about it. We've had all of the news surrounding the Cybertruck and Cybertruck deliveries. We've had the Model 3 Project Highland revamp, which is super exciting. We've had price cuts across different vehicles and in different areas, for example, China. We've also had price cuts on the FSD software. We've had FSD version 12 being live streamed and demonstrated, and that looked really promising, and it's progressing very, very quickly. And linked to that is the other announcement that came out about Tesla having 10,000 NVIDIA H100 chips plus their supercomputer dojo, which is now removing the bottleneck in terms of FSD exponentially getting better. And honestly, there's been so much more, so I'm just going to stop there. But a lot of exciting things have happened and are still going to happen for this company. So my top 3 largest positions, not including any of my crypto portfolio because I just tend to keep that off of YouTube. I have Tesla, which is my largest. Then I have VUSA, which is on my other account, which is, like I said, an S&P 500 ETF. And then I have Palantir. So those are my biggest at the moment. Tesla will continue to be my biggest, I believe. Maybe Palantir will take over my VUSA holding at some point. I can't invest into that account anymore. So if I do want to add more to an S&P 500 ETF, I would need to add it to this account. I should say as well, in case you're not familiar, these gains or losses that you see, so let's just look at Tesla, for example, this 1,470 is just changed. That is the amount that I would get in gains from this position if I sold it right now, because that figure actually already takes into account the FX impacts, and obviously, like I said, there's no tax on this account. So in terms of which positions I have not added to, Diageo is one of those. This stock in particular actually has not been having a great time. You can see I'm down by, £30, whatever. I don't really mind at all. But over 3 months, you can see they're down. 1 year, similar picture, not good. And it's only till you max it out that you start seeing, look, they've really not had a good time for quite a while now. And I think that is an accumulation of different factors. Their CEO sadly passed away, and obviously that has shifted their management team and their executive level quite a bit, and that is going to impact the stock. It will eventually smooth out, and it won't carry on impacting the stock forever, but it's shaken things up a little bit. On top of that, they got legal battles ongoing, and of course, the economic times, the economic situation, it's not been optimal. People are a bit strapped for cash at the moment, and a lot of investors worry that what that means is that people won't be actually paying a premium price for named goods that Diageo offer. They will instead turn to cheaper alternatives. But actually, you could also argue that this has a very strong brand loyalty, and typically if you look back at their history, they do very, very well during recessionary periods and following recessionary periods. They are a very, very strong company, and their financials look very strong. And on top of that, they got some very interesting new product lines coming out. So I think that it's an exciting time. They're undergoing a lot of change, and I just don't see them going anywhere anytime soon. But equally, it's not my highest conviction position in terms of, I don't feel like this one is going to give me as much in return as maybe if I were to invest more in Tesla, for example. So happy with the position, but just haven't added more yet. And then National Grid, again, I haven't added any more. Unilever, similar similar position here, still have the same number, and this Vanguard FTSE All World High Dividend Yield ETF. I have had a couple of dividend payments since the last update. So I got one the other day for Unilever, and I am expecting this Vanguard FTSE All World High Dividend Yield ETF, wow, what a tongue twister, to come in September, near the end of September. And then I will be expecting one from VUSA in my Vanguard account also. So the position that I actually removed was Canadian Pacific Railway. Now that is a Canadian, obviously given the name, position, and that means that I get taxed. I get a withholding tax on any dividends that I get from that position. And I had such an insignificant amount of money in that position with the dividend yield that it has, that getting taxed on that amount that I was going to get paid anyway just literally gave me nothing at all. And that is fine if you want to build up that position, but I was also noticing that I had no intention of adding any money into that position, and I hadn't done since I opened this account. Being really, really honest with myself, thinking logically and not emotionally, I cut my losses with it. I moved the money into another position, and I'm very happy I did that. I still think that it's a great company. It's a good dividend growth stock, and you know, the moat is incredible, but it just didn't have a position in my portfolio. This is my allocation detail, just in case you're interested. So you can see I have 8 positions, and these are the percentages of those positions, Tesla being over half of the portfolio right now at 51%. So let me know how your portfolio is doing in the comments below. And like I said, if you do want to sign up for Trading 212, definitely use the link to get that free share. Thank you so much for watching. I hope this video was interesting, and I'll see you in another one very shortly.